Hi, it's Dick Ray here. Welcome to this webinar on career opportunities in banking, which is covering the retail and group risk area. This is a collaboration between the International Actuarial Association, the Actuarial Society of South Africa, and the Institute and Faculty of Actuaries. And within those three entities, there are various banking working groups, member interest groups and committees who have together enabled this to go ahead today. So thank you to them. If I can introduce myself, my name is Dick Ray. I chair the IFOA's Finance and Investment Board, and I also chair the IFOA's banking member interest group. I spent 15 years in investment banking. I started my working career in insurance and reinsurance before moving across, and I spent 15 very enjoyable and fulfilling years working variously for JP Morgan, Deutsche Bank, and more recently HSBC. I actually left the banking industry 5 years ago and moved across into asset management, which just proves that a career in banking can lead on to other things as well. So, look, I'm very pleased to have with me three panelists that can give you an insight into the world of banking and career opportunities there. Thank you very much for joining us. And before I set the scene for the webinar, I'll introduce you to, or I'll let Claire rather, introduce herself.
Thanks, Dick. So my name's Claire Beale. I also work in banking. I'm a life actuary by training, and that was where I started my career. But now I head up model risk management globally for HSBC. I've worked with HSBC for the last 9 years or so, starting working within insurance in the bank and then moving to model validation.
Okay, I'm sorry. I believe we lost sound from Dick and Claire, who are together. So we will move on to the next slide. Anuis, if you want to go ahead now.
Yeah, absolutely. Thank you. So my name's Anuis McIntosh. I'm currently a customer journey manager at RBS, focusing on mortgages. But before that, like Claire, I was qualified as a life actuary. So I worked at Standard Life for about 10 years across a whole variety of areas, including pricing, profitability, pensions, investment products. A brief sojourn at Standard Life Bank, which really ignited my interest in retail banking. And then a brief time in capital and risk management as well. But it was that desire to get closer to products and closer to the customer that led me to move into retail banking and at RBS, where I've worked for probably about 8 or 9 years now. I think, yeah, that real passion for customers and making a difference to the customers is what's driven me to retail banking and the great opportunities within it. But I'll pause there. I'll let Anthony introduce himself as well.
Yeah, good evening to everyone in Asia, and good afternoon and good morning to everyone in Europe and the US. I think a couple of people have just mentioned that they are struggling with the audio. If you are, just drop out of the WebEx and log back in. Dick, we may need to just send a message to the group chat to all the attendees. Okay, in terms of my own personal introduction, I'm a partner with PwC Singapore, working mainly in the area of banking, which includes credit risk modeling like IFRS 9, Basel II, operational risk, model development and validation. My experience started as an actuary in South Africa, qualified as a life insurance actuary, worked across a number of the disciplines before eventually specializing in the area of banking. And one of the things that I do enjoy working on and contributing to is that I'm an examiner for the South African Actuarial Society's fellowship in banking. And that's, I think, quite an interesting thing to be part of, but also an indication of the extent to which the actuarial profession has developed and entered into the area of banking, at least in South Africa.
Thank you, Anthony. Can I just check, has Dick rejoined us, or is he still struggling? Okay, if he's not, then if you don't mind, so this is a brief overview of what we're going to do. So in turn, we'll talk to each of the panelists about what they believe the opportunities are in banking and the actuarial aspects of the work that they do. Also, as I'm sure you're all very interested in, what the roles are for actuaries within banking and how do you get there? Although it might be that we leave that to a sort of panel discussion at the end. Now, if Claire's not still online, I might do something which I've been told to do a number of times, which is have a good word with myself. So can we flip forward on to the slide? There we go. Thank you very much. So I'll just briefly talk through those different opportunities as I see them and a couple of other topics, which I hope will be of interest. So I'd maybe like to try and flip around that first question about what are the opportunities in banking and really say, so why would actuaries not want to get involved in retail banking? So, you know, as I'm sure you all know, retail banking performs a vital role in any country's economy. The traditional banking model of retail banking model, of historically combining consumer payment processing with deposit taking, lending to households and small, medium business customers is really at the heart of any economy. Obviously, we use current accounts, but there are many more retail products that customers will use to do that, such as mortgages, it might be credit cards, it might be sort of short-term loans. But that fundamental, you know, being a fundamental part of an economy and its investment and value creation, enabling the sales and purchase of goods and services makes it something that why would an actuary not want to be in something that is so important? And really just to, you know, a couple of big numbers to bring some scale to that, and apologies, these are UK specific, but I hope they help. There are around 73 million customer current accounts in the UK just now, about 4 million business accounts with retail deposits, so those savings accounts totaling £1.5 trillion. In the UK, our households own about 1.4 trillion pounds worth in mortgages and just under 200 billion pounds worth in consumer credit. So in terms of, is this important? I would question whether you could get more important to the success of any country or any group. In terms of the roles and the skills that actuaries can bring to the banking industry, for me, there's lots of different facets, and I think there's a big picture thing about you as a person have a wide range of skills, knowledges, and experience that can be applied to any problem solving, any design situation. And I wouldn't limit yourself to thinking, because I've worked in capital, for example, I automatically map into capital and banking. There's a real head on your shoulders that can be applied to a number of different processes. But to help bring that to life, risk is obviously an area where we're of real strength and a recognised ability across the financial industry. And in retail banking, there are huge amounts of risks that we need to understand and manage on a daily basis. So we can think about our liquidity risks. We've got long-term loans backed by short-term deposits. It caused so many problems for some of our banks a few years ago. We've got the credit risks. So will the customer keep paying me back like they said they will? Will they default on their mortgage, for example? And if they do, how much will it cost us when they do? We've got customer persistency risk. So will the customer pay off their mortgage early or repay their loan early? We've got interest rate risks, where fixed rate payments, so a customer might want a fixed rate mortgage, but the funding that we use to source that might be based on a savings account with a variable rate. And finally, we've got operational risks. So around 40 billion payment transactions are made each year. We've got a continual move towards digital, and all the while, lots and lots of humans involved in a number of these processes. How do we manage that operational risk? How do we understand that operational risk? And what part can we play in mitigating a lot of it? Now, all of these and all of those understandings require complex technical calculations across these multi-billion or trillion-pound portfolios. Beyond that risk management, there's also pricing and profitability, where I myself worked, where all of the above, plus competitive pressures, are converted into decisions about what rates and fees we want to charge our customers. And just thinking about that scale of industry transactions and number of customers, that means, as I'm sure you can guess, lots and lots and lots of data. So the opportunities, the incredible opportunities to use analytics and powerful data to support our business decisions, to drive our strategies, and really importantly for me, better understand our customer needs is a great one, and Actors are very, very well placed to do that, and the number of the challenges that are raised through it. If I just talk briefly how I got into banking specifically. So I mentioned before that I'd worked in Standard Life for about 10 years. As part of that, as a graduate rotation there, I worked in Standard Life Bank. And that, although it was probably only about a year or 18 months, I really enjoyed the nature of the products, the needs of the customers, and the different non-investment, non-pensions, non-savings based challenge that it produced. It was a very different customer base to those that I'd worked with at Standard Life in the main business, where we'd been bespoke pricing, let's say multi-million-pound offshore bonds. Here we were working with customers that my friends and my family were using on a daily basis, and that really resonated with me. Having spent that time at Standard Life and worked in most of the areas I wanted to try something else. I wanted to get an opportunity outside of the life insurance industry, and an opportunity arose at RBS to work on profitability modelling of their retail products. So profitability modelling was something I had a lot of experience in, investments and savings and pensions, and here was an opportunity to do it with a different product base. So that team that I worked on grew to work on data analytics with a sort of finance slant on it, and like I say, there was lots of read across of the skills and experience, which helped me not only get the job in the first place through the interview, and but also when I sat down and did the job. The exciting challenge was that the cash flows that were involved in the different products were involved. The other exciting element was really educating colleagues about the value of the work and the insights that it produced. So the opportunities for new products based on the modelling that my team were able to produce, the changes to the charging structures we could put in place. A real case of different eyes to an old problem, but it brought about lots of great conversations. And one of those great examples of, you know, the skill of an actuary being explaining complex problems, distilling it down to simple stories and anecdotes, and then leading it through into management decisions, and it's really been a great example of that. Beyond that, I've then worked more into the product side of things, so a really commercially focused team using data to look for different market opportunities within the mortgage market, and alongside that working with risk colleagues to understand where our policies could be adjusted to help the bank and its customer. Now that's really challenging, I suppose, because the boot's been on the other foot. Usually as an actuary, you're the real, I guess, gatekeeper on risk and risk appetites, but that's really involved me using different languages, but talking really, do we understand our risk appetite? Are we really looking holistically at our exposures, as well as being able to understand and get into some very, very technical questions around Basel II, which has been great fun to dig up the spreadsheets, which has been a while since I've done that. Most recently, I've become a customer journey manager with responsibility for our existing mortgage customers. That role has a really wide scope covering different customer transactions, legacy books and legacy platforms. It's very customer focused and thinking about the end-to-end journey that the customer goes from when they want to make, let's say, an overpayment on their mortgage, or they'd like to take somebody off their mortgage. Now, I think it's probably a bit as far from my work on capital risk projections as you could possibly get, but it's been nonetheless hugely rewarding. It really requires an immersion in the journey and seeing things from the customer's point of view. And what's been really good, again, bringing my actuarial background into it, has been that I've been supporting these decisions with data to give a real solid footing to base my conclusions upon, rather than relying on anecdotal evidence or personal views from senior managers or a couple of observations and conversations overheard. I'm going to pause there. Dick, did you just join the call there? You managed to join us again?
Lewis, I did. Thank you very much indeed. And sorry, everyone, that Claire and I managed to drop off here at London, but I sense that you've been going through your work and really answering the questions about the opportunities, well, what you do.
Absolutely.
Yeah.
Yes, that was really perfect timing, Dick. So Anthony and myself have both introduced myself, and I've just been talking to the opportunities and the roles for actuaries within retail banking. Right. So I'll hand the baton back over to yourself if you and Claire would like to talk briefly.
Thank you very much. So perhaps it's best, so Claire can talk to what she's doing at HSBC and introduce herself now. Is that correct?
Yes, that's right.
Yeah.
Yep. So apologies for the technological hitch earlier, but I am Claire Beale. I currently head up model risk management at HSBC, and I'm the model risk steward. So what does that mean? I'm responsible for setting the policies that we would expect all of our models, owners, users, stakeholders to adhere to, so that we can understand where we're using models across the bank, be it within the retail bank, commercial bank, trading floors, within insurance, pensions, wealth, stress testing, finance. We have thousands of mathematical models across the bank globally. So I'm in charge of setting the policy and the governance we would expect people to adhere to, and also run the independent model validation teams, which of course go around and check that we understand the model risks that we're running and that they fall within the appetite that we're happy with. The model risk steward piece really is about pulling all of that together and ensuring that senior management understand what model risk is, what it looks like, and whether we are in fact managing that risk to within a level that we're comfortable with. So following on from Lewis's articulation of what he does, I use my actuarial skills every day, albeit in the context that I work in. I don't say that I'm an actuary, because the world I work in, people are very used to having PhDs in highly quantitative areas. And when I first came into this role, saying that you were an actuary wouldn't necessarily have added to the credentials. But what I have found is, from using the skills that we learn very clearly through our professional training, it has been very easy to demonstrate the value that actuaries bring, from our application of quantitative analysis through to articulation of what that means to lots of different audiences. To Lewis's point, I engage with chief risk officers, chief executive officers, boards, non-execs, heads of business, modelers, and everybody in between. So the ability to take the quantitative, really understand the risk, and articulate that in language that people can engage with is quite critical. I also, of course, engage very heavily with our external auditors in the context of financial statements and a number of other stakeholders that we would interact with in that regard.
Cool. Thank you very much indeed. I sense everyone's now introduced themselves, and I think also started to address some of the things that we're wanting to address in this webinar. So what our panelists are going to cover, if Nancy can move to the
Sorry, Dick, I was just going to say Anthony's not had a chance to talk. So I've talked through the individual slides you had for us about the opportunities in banking and the roles myself.
Sorry, Anthony, would you like to do the same as well, covering the opportunities?
Yeah, sure, I can do that. I'll keep it fairly brief. I mean, I think Claire and Nurs had already covered quite a fair bit of stuff that I could have spoken to, which is good. I would just emphasize a couple of points. Firstly, being one of the strengths of actuaries is that we understand both the asset side and the liability side, which puts us in a good position to work in a bank where you are dealing quite a lot with assets, but you need to quantify risk from a liability point of view. I think the second aspect is that we are used to thinking long-term in nature. So not just 1 year time horizons, but multiple year time horizons, which also puts us in a good position to actually model cash flows, project risks, allow for different decrements, and quantify things from an actuarial or quantitative point of view. And then the third point, which Claire spoke, and I strongly agree, I think where actuaries can really add a lot of value in banking is around the communication point aspect. Our training, having a communications exam and sitting a number of papers where you actually have to write down your answers in a lot of detail, essay format, and explain your position and your analysis is something which not a lot of other people have. If you just study a university degree and not a professional qualification, you don't necessarily have that same emphasis on communication. And that's critically important, both in terms of explaining what you've done, why you've done what you've done, but then also for that to be able to stand up to the auditor and to the C-suite within the banks. In terms of opportunities, I think there's a whole host of things from the point of core modeling, provisioning, strategy, reporting. There's a whole bunch of things that actuaries can do in banks. How I got into banking was just a little bit by luck in that qualified as a life actuary, and there were opportunities to work with banks to help them with scorecards, which is risk ranking of customers. And that was an entry point, and the opportunities just followed on from that. It is a little bit difficult to enter into the banking profession if there's not already an actuary working within that team, because they may not fully appreciate the actuarial skill set, and they wouldn't offer things like study support and the traditional insurance or consulting firm for actuaries type benefits. But I think once you do get in there, the opportunities really, just keep coming, because our skill set is unique, and it is something that really stands out from just a normal skill set. Dick, I think we can probably move on from there.
Right, lovely. Thanks very much, Anthony. It's interesting the fact that all of us, I don't know if people heard my introduction, but all of us started out as life actuaries and have kind of mutated across into the banking field. And I don't think that's necessarily surprising, because that's where you find actuaries. And, a couple of interesting things came out of that. I mean, Claire, because I know from when I was at HSBC, you were on the life side at that side. How did your opportunity move across come, and was it an intentional move by you, or did it just kind of happen?
In a similar vein to Anthony, I would probably say that, candidly, I've gotten my best roles almost by accident. So the way I got into HSBC initially was at the end of my stint at PwC, I'd had the opportunity to get involved in something different. So I'd worked for the head of assurance, running around across the whole business, doing exciting strategic things. So that opened my eyes to the fact that there was a world outside insurance. I then looked to HSBC, being a very large multi-business line global bank, but saw my best route in as through the insurance operations. So I came in initially as Deputy Chief Actuary of Europe, but knowing there was a potential for other opportunities once I'd made a name for myself. A year or so into that role, we strategically reorganized, which opened up other opportunities, albeit still within insurance at that stage, but that got me noticed. And then a couple of years after that, I had a phone call one day along the lines of, if the global head of independent model validation were to become available, would you be minded to apply? So to Anthony's point, once you're in and you have people see your skills live, because they may not know what an actuary is across the core bank, once you see that you can bring value, all of a sudden opportunities open up, as long as you get in there, prove a name for yourself, roll with it. You'll find that there are a number of things where you can add real value.
Thank you very much indeed. And excuse me, Nuis, did you cover off how you transitioned from the life insurance side into banking?
Yes, I did very briefly. It's maybe worth just dwelling on it slightly. So I guess as part of my graduate placements, there was an opportunity to go into the Standard Life Bank, and I think that was probably the first start of, let's see what else is out there. So I think as an industry, we're very good at saying, let's get ourselves into different industries outside of, you know, our pensions and life typical places to go. But opportunities are there to dip your toe in the water if you take them. They might not be immediately attractive, but they are there. I guess that was the start of it. Beyond that, it was then, I guess, so it wasn't quite the same as Claire's experience. I really had to get on my bike, so to speak. But the warmth was, the warming to the industry was through that graduate placement.
And you may have covered this again, but did you, I mean, on Claire's side, I can see how, you know, all the modelling work is, you know, a natural core actuarial skill. From your perspective, Nuis, did you find that going into sort of, if you like, product development, if that's the correct term on the retail banking side, is that a place where actuarial skills were being used, are being used, or what's your sort of, what's your comments in that respect?
Sure. So I had to probably make a sideways move into banking, as I saw I needed to make a name for myself. And I did that by moving across with skills and experiences that I knew I had a strength in already, that I didn't think were obvious within what was, you know, ordinary retail banking. So I had pricing and profitability experience. I moved across to a team that worked on profitability by demonstrating, look, I've done it on those products, I can do it on your products. But my sort of long-term game was always to move into more product management, product design, which I've got to. But I think it's not quite, it's a very simple game of chess, but it's understanding, you know, where do I want to get to in 5-10 years, and how do I use the skills that I've got just now to get there? What are the bits I need to pick up in order to get there? So it was, yeah, slightly more challenging, but like I said, nonetheless rewarding now that I've got there.
Thank you very much. We've got some questions starting to come through. So if, you know, I do encourage people listening to this to fire their questions across. We've got a good one from, that I'll fire to you first of all, Anthony, from Claire Green, who's asking, what do you think the profession could do to help support actuaries working in banking? Now, you know, that's an interesting one to fire from a global perspective, because in South Africa, I mean, perhaps Anthony, you can talk to that a little bit, but do you mind answering the question?
Yeah, sure. No worries. Yeah, I do think the biggest obstacle for a student looking to work in banking is that your employer wouldn't necessarily appreciate the need for study support, study leave, and why you want to do your final exams in something like life insurance or pensions or non-life. And I do think having the profession encourage, either through events like these, which have a broader reach, or through professional exams, whether it's even the CIRA qualification that could introduce more banking type concepts, or like in South Africa where they formally introduced a banking fellowship, makes a massive difference because you at least get to credentialize yourself in something that the employer may see as relevant. And if you are lucky enough to work for an employer in a bank that is an actuary, they may still be supportive of you, pursuing an exam in life insurance or something like that. But if your direct reporting line is to someone who's not an actuary, they may not really understand it. And I think having that banking subject matter will help. Following on from that is that, banking, just like all the other subjects, is fairly broad. There's a whole host of things inside. There's liquidity risk, there's market risk, there's credit risk, there's capital, there's provisioning, there's stress testing. There's a whole bunch of things inside. And having some well thought out together material to go through helps prepare you to be a little bit better prepared in communications and more eloquent, and also able to actually identify where you want to start focusing. I think traditionally a lot of actuaries would get started in the retail side of banking because that's where more of the modeling is involved. But there's a lot of opportunities outside of retail credit risk modeling. So I do think the profession globally is slowly moving towards this. I know that some of the guys in Australia and in the UK are considering also introducing some type of banking qualification at some point, which would be a big step forward. And I think just, beyond just the qualification, having the profession encourage people to work outside of their the traditional fields is massively helpful. We recently had an IFOA event here in Singapore, probably last year or earlier this year. And one of the big items for discussion was how do we differentiate ourselves and compete with all these data analytics people that's coming around saying we can do pretty much similar things to what actuaries do. And so the profession encouraging us to use our actuarial skill set outside of where people traditionally see us using them, I think would also be helpful.
Yeah, I mean, that's that's very helpful to know what's going on in South Africa in particular. Over here in the UK, I'll answer this in terms of what the banking member interest group is doing at the Institute and Faculty of Actuaries. We're very aware that the IAA have produced some good material, and we know that there's a fellowship exam in South Africa. And it is fair to say that we're aware of other banking qualifications that you can get, but they do not have the sort of actuarial material that you would expect. And so I think we're looking to see what can be done to give actuaries a little bit of confidence that they've got a skill set that is relevant. I mean, even understanding a bank balance sheet would be helpful because it's all about the asset side rather than the liability side. It's almost as if the balance sheet is the other way around. And we're also aware that Swee Chi, the incoming chair, and also John, the current chair of the Institute and Faculty, president, they're very supportive of getting involved in the wider fields. And certainly the Lifelong Learning Board are looking more broadly at what additional education can be brought on board. And, banking may be one of those topics that they start to try and provide more materials so that actuaries can get educated. Lewis, is there anything you'd want to add to that or covered?
No, I think we've covered most of the things. I mean, for me, the other thing we just need to add is just networking. So I think there's things that the faculty can do to support people in terms of the exams and the structure and giving you that foot in the door. But I'd also, encourage people to call other people, reach out and use them because, as an actuary in the banking industry, I am desperate for other people to join me within it. And we do all that I could to support them in doing that.
I was sitting here thinking I might be quite controversial in terms of, I think education is great, but there's nothing like, to Lewis's point, just getting involved in whatever way you can, because the minute you show the value you can bring, things unfold from there. My nervousness of saying that education is the answer is, by the time you've done that or you've got the badge, the world's moved on. And sometimes getting the badge won't actually help. What really helps is people seeing you on the job, seeing the value you can bring, the analysis, the insights. But sometimes to get in that door, you have to be less special. So I personally found losing the badge, as it were, being an actuary sometimes opens doors for you. But in the context I had, I almost had to forget that part of me and prove my worth through a different route. Once you've done that, it's incredibly powerful. So to Newell's point, networking, seeing some examples of routes other people have taken, I would think is hugely powerful. To Dick's point, brainstorming and knowing your way around a balance sheet is very important. So I sat there with a piece of paper and I literally mentally thought through, okay, if I'm selling mortgages, how do I calculate the assets? How do I calculate the liabilities? What's going on? And I figured that in insurance, you're spending a lot of time on the liabilities. In a bank, through those business lines, it's the assets, but then you've also got fee business. So do your brainstorming, do your homework, and then just get stuck in once you can speak some of the language, not all of the language, and you'll find it follows.
Thank you. Yeah, please do keep questions coming in. I've got another question here which says, what would you advise a student who is just starting now his or her actuarial career examinations? Because you said that actuary skills and values are not fully appreciated in many industries. Lewis, do you want to kind of tackle that one first? Are you all right with that?
Yeah, absolutely. So I think so I think the good thing about the actuarial exams, if we start with them to start with, is you're going to get abroad, through the early exams, you're going to get that good grounding. Anyway, in terms of the specialisms, you'll probably have a good sense of what direction you're wanting to head into. I mean, I would imagine it's probably tied in to some extent on what your employer will pay you for as well, and the specialisms that you develop will be helpful in that employer in those first stages of your career, but it's probably more around the experience side of things, I would think. So, the letters after your name still mean a great deal to lots of people. Explaining to them that you're an actuary will still mean a great deal of something, to some more than others, but that getting that qualification is important. But I would think it's probably more on the experience side though. So what are the projects? What are the clients? What are the things that you can just go, right, can I just start to learn the language of that industry? Can I just understand some of the challenges that they face, which then helps you understand, right, so these are the problems they're dealing with. And again, when you're put in that interview situation and the customer, the interviewer is saying, oh, so what have you thought about this? Have you thought about that? What's your experience of that? You've got those examples and anecdotes that you can share with them in that situation. So it's probably less so in the examinations, and I would focus more on the on-the-job experience.
Claire, have you got anything?
I would say, so to don't take our comments as negative. I think the exams are incredibly valuable because of the content that you learn. So the technical exams are hugely powerful. The communications exam and the professionalism experience, vitally important. And what you learn in terms of being able to interpret, be it accounting standards or prudential regulation, and then turn that into a solution. I think these are huge differentiators, and all of that is incredibly valuable. To Newis's point, the projects where you've applied those skills are incredibly valuable to be able to recite. But what we're saying is the badge will not get you the doors to open, but the content that you've learned through doing that absolutely will. So we're not minding the qualification in any way, shape, or form. This is all about why it's a huge enabler. But what we're trying to say, I think, is the way you position that and the way you get people to want you and value you needs to be thought through.
I mean, the risk side is a kind of a more comfortable place to get into for actuaries. Do you actually go out looking for actuaries when you recruit?
So in the part of my team that specifically look at insurance and pensions models, we do. But those actuaries and skill sets, to Anthony's experience, we are absolutely also using on things like IFRS 9. So I won't say I need X actuaries, I'll say I need X model validators with these sorts of skills, because frankly, I don't mind where they come from. I need the skills, but or those who are actuaries know that they come with a certain skills package. So it's the labeling.
And so actuaries would need, how would an actuary see those adverts?
So there are a number of agencies in London and globally who specialize in banking roles, and they look for model validation or model risk or model governance or data analytics and data science. So all of those areas are ground for using your actuarial skills. But if you walk in saying, I'm an actuary, and expecting people to understand what that means, that may not happen. But you do have some of the raw ingredients.
And Anthony, what about through the consultancy route? How do you employ actuaries, and is that a good way for actuaries to get into banking, or have you got anything else you'd like to add to what Lewis and Claire have said?
Yeah, it is a good way. One of the benefits of working in consulting is that it's possible to work across a number of things and find out what you enjoy and what you're good at. And one of those things may be banking, and one of them may not be. You could work in an actuarial consultancy which covers insurance and banking, and you can try a bit of both in a safe space and then figure that out. But I agree with both Claire and Lewis in that it's not so much that you want to hire an actuary, and that's your first hurdle that you want someone to pass. It's that you look for someone that's good, a good fit for the team, that's got the right attributes, that's got a sparkle in their eye, that actually wants to learn and do work. But having someone with an actuarial background does bring a lot of benefits, because you do know how they think, you can speak a common language, and you do know that there's some quality behind the qualification. I think that professional qualification does mean a lot, even though you may not be signing off in terms of, it's not a statutory valuation role, but you do know what comes with it and the thinking that comes behind it. But it's definitely not a prerequisite. So you can find people with engineering degrees or accounting degrees that can be equally adept at doing complicated maths. And you can find some actuaries that are really terrible at their jobs. So I would say that's definitely not the main thing I would look at in recruiting.
My next question, actually, which is an adjunct to that, which just answer it quickly rather than linger on this, because there's certainly a couple more questions I'd like to cover in the time we have. You've said that banks don't necessarily provide the study support that those in the traditional fields are used to. Mm-hmm. And would you, so that puts a lot of that means that actuaries have to take holiday or do it in their own time. Is it an idea to qualify first and then look for roles in banking, or do you just bite the bullet? And any comments on that?
I'm not sure what's better, but I did absolutely qualify first. So I'd worked for a life insurer. I then spent 11 years at PwC, so I did the consulting piece. And I absolutely moved into banking as an experienced hire. Yeah. So it was much easier. I didn't have the study package piece, but I'm not sure what the best answer is. I can only talk about it.
Right, Lewis, have you got any comment on that or views?
Sorry, it broke up there a second. Could you just
So
repeat
the,
the
so the
question?
question is, qualify first or feel, just join a bank and then qualify even though you may not get the study leave?
So I would always encourage people to qualify first. I think that probably goes back to what I was saying before. Apologies if I maybe misrepresented my views, but no, the badge of having an actuary is really, really important as it's recognised across the finance industry, and I would encourage people to get that first, and then, but whilst you're qualifying through your employer, look for those opportunities for those projects or customers that would give you that experience. About whether it's investment banking, retail banking, whatever sphere it is that you want to move into, but no, qualify first.
And Anthony, would you agree with that, or do you have a different perspective, perhaps with yourself?
Look, no, I think it depends. I mean, in my case, I also qualified first, but I do think it depends on what the opportunity is ahead of you. You may find something that's really good, that's in a great team with a great mentor that you can work with. That's very interesting. And if you're lucky, it may be in an organization that already has a number of actuaries working there. So not all banks are, not offering study support and things like that. That being said, it is a massive amount of time and time sacrifice to qualify, especially for the later exams. And if you don't get that support at the employer, it does become very difficult to complete your exams. I would say the only other consideration that I would have is that if you're working in a life company or a pensions company or non-life or whatever it is, and you're pursuing your final exams and you're specializing in that and you've put in a lot of effort, you also may think, well, you've kind of progressed that far in that industry to then switch. Does that make sense? I would say it again depends on the opportunity. You may find something that is good and where the opportunity is there, and it may be something senior enough where it's about problem solving and communication. But it may also just be something where you've got a good valuation role in a life company that's got good prospects, and then to move cold into a bank that don't really value your skill set may also be a challenge. So I think it depends on the circumstance.
Thank you. I'm just scrolling down the questions here. Here's a good one. Right, what additional, I like this one, what additional skills do you think actuaries bring to the table over non-actuaries in the banks who've completed their PhD, MSc, FRM? So yeah, what differentiates us? What can we play on? Claire, do you want to tackle that one?
I'm smiling. So I work with hundreds of individuals who perhaps have PhDs, FRM, MBAs, etc. So I would say the key differentiator I see in the work that I do is what I'd call the concept of duty of care. So the training that we get through being an actuary absolutely drives us to ensure that we understand whether people really are asking the right question before we pile in with an answer. So I don't see that same discipline in some of the PhDs. So they will absolutely go for a quantitative answer, not necessarily stepping back and thinking, is that the question that should be answered rather than the question that happens to have been. So I'd say duty of care, the ability to look much more broadly and frame communication from an end-to-end risk perspective. And then thirdly, the ability, as I've said, to take whether it's an accounting standard or a piece of regulation and understand what that actually means and look at the alternatives then from a quantitative perspective. So more than the numbers would be my summary.
Anthony, I'm going to pass that question to you next because maybe you can comment on this. My understanding is that actuaries have done quite well in banking within South Africa because because it's a trusted profession, and after the financial crisis, certainly the banking industry took a bit of a knock. But you can comment on that or not as you see fit. But again, what skills do you think actuaries bring to the table?
In addition to what Claire said, and we see it in Singapore, South Africa, and the rest of Southeast Asia as well, is beyond just the technical side, which an MSc or PhD would have. It's the ability to actually apply judgment, to know that we're dealing with imperfect data and limited time, and being able to say, based on all information available to me, my experience, my judgment, this is my position and this is how I defend it, I think is massively valuable. Not saying that the others don't have that, but where you are very academically focused, you may say, okay, let's just try and refine and refine and refine, and let the model speak for itself, as opposed to being able to put some judgment behind it.
And Nuis, is that true for yourself as well?
Yeah, absolutely. So I think Claire mentioned before about communication and the importance of that for actuaries, and making complex things more straightforward for those. It's a bit of a cliche, but thinking long term as well. It goes back to the sort of holistic points that Anthony and Claire were making as well. It's not the immediate. You've asked me a question, I've given you an answer as quickly as possible as well. I'm just going to take a wee bit longer to make sure we've thought this through thoroughly, and then give you not just the answer that you've asked for, but also a couple of other things that you might not have thought of yet. And I think that's always valued.
Absolutely. Cool, thank you. There's another question here which says, I'm a qualified actuary and I'm considering studying for the CIRA qualification. How recognisable is the CIRA qualification in the banking industry? And would having CIRA help to get a foothold into banking? Well, is that a tricky question? Does anyone want to put their hand up to answer that one? I'm kind of looking at you first, Claire,
Yeah.
but you could dodge it if you want.
So I suppose sweeping generalization, because to Anthony's point, there are a huge number of different roles within banks. But broadly, I would say CIRA wouldn't get you a step ahead of anyone else by the label. It would be demonstrating the value that the content has given you. So the label itself is not going to open doors, from my personal opinion, but it will be what is it that you've learned through that, and how can you show the value? Because frankly, the interest will be in what can you do for me, what value can you bring, and how, rather than I've got an MBA, I've got CIRA, I've got a PhD. It's making the link.
I've got a question here from Samuel this has been far from Mauritius actually. With the introduction of IFRS 9, how will that increase the actuary's role in banking, and also to increase their career opportunities in banks? I mean, yeah, if IFRS 9 was interesting, because it's certainly, my understanding of it is the way that you value assets and means that there's much more of an actuarial mindset about what an asset's value should be.
Yep.
Can I fire that one across to Anthony? Have you got any?
Yeah, definitely. I mean, IFRS 9 has massively increased the potential roles for actuaries in banking. And the simple fact is, just because IFRS 9, without getting into all the technical detail, requires you to estimate your expected credit losses over the lifetime of that loan. So if you've got a 30-year mortgage, you need to say, what do I expect to lose on a 30-year mortgage, including the effects of potential early repayment, the effects of macroeconomic adjustments. And so it very quickly becomes a very statistical, long-term projection of multiple decrements, which I want to discount to present value terms to estimate this provision. And being able to document and communicate that to stakeholders. Before this, a lot of banks and a lot of people in banks always used to think on a much more short-term basis, a 12-month view. And that didn't necessarily require a high degree or as high a degree of predictive modeling or accuracy. So at least my experience has been that the introduction of IFRS 9 has been a big step for actuaries in the area of banking. Because a lot of our skills become a lot more relevant as soon as things become longer term in nature.
I've also, when the IFRS 9 came in, I personally found it slightly amusing in terms of the cultural shift. I would describe that it's given to the nature of the P&L and balance sheet in terms of the credit book. To Anthony's point, exactly, you're absolutely changing the way that you book that business. And I know that the external audit teams we face off to have been using actuaries. So, albeit again, people wouldn't necessarily recognize the label, the thinking, the analysis, the expectations in terms of sensitivities, analytical reviews, etc. 100% come from your actuarial mindset and training. So we've seen that in spades over the last year with the introduction of IFRS 9.
Okay then. And I suppose I just want to go back a little bit to that question about, you know, the fact that actuaries, certainly the Institute and faculty and other societies, you know, there's probably more that could be done to educate actuaries. Have you, Lewis, I'll ask this one to you first of all, if I may. Where would you suggest actuaries go to find out relevant information about banks so that they can gen themselves up a little bit before, you know, going for opportunities, so they've got that little bit more confidence that, you know, they have got the skill sets that they need to make the transition?
So I believe there are, you know, so there's not a huge amount, but there is still some research that's been done on banking by the actuarial profession, so that stuff will be available on the website. So that would probably be the first place I would suggest it. The usual sort of, and then just pulling on your network. So looking for people who have that experience to maybe sit down with you for time and explain some of the high level concepts, just enough to give you that foot in the door.
Yeah, yeah. Anthony, have you got any comments on that?
Yeah, I agree with Lewis on that. And just to add, I mean, if you go to any of the big four firms or any consultancy firm, a lot of what we try and do is thought leadership and marketing and all these kind of things. If you go on their website, it's likely that there'd be some articles published on what does IFRS 9 mean for you, or how do we deal with Basel II, or things like that. And reading through those 20, 30 pages, you will very quickly be able to pick up on where an actuary could get involved.
I did similar, but possibly a little bit more analytical. So I literally drew myself a grid of all the business lines, and I had a column for how do you price, a column for how do you work out the assets and the liabilities, a column of capital, and I literally bullet pointed all of these things. And to your point, Anthony, IFRS 9, you know, relates to the asset valuation for retail mortgages, say, and you fill in the blanks. So then you start filling out the language and the content, work out which areas you might then see the opportunities, but you've got the framing of the language that you need.
And I've got probably one final question to quickly fire to Anthony, actually, which is that, you know, we can see, as I say, I personally can understand exactly how actuarial models apply on the risk side. I can see that in terms of pricing retail products, actuarial models, etc. There, of course, a big, huge area of banking is on the credit side. As a consultant, do you see, are there opportunities for banking for actuaries in that respect?
On the credit side, I mean, it makes up 80% of most banks' balance sheet. So that's definitely the area that they'd focus. And that's where you do the more actuarial type modeling. Outside of credit risk, when you get to operational risk or market risk or liquidity risk, a lot of the techniques are a bit more statistical in nature and predefined in terms of literature. And where actuaries can add value there is in terms of being able to communicate the results, interpret the results, and actually make decisions based on the results. But on the credit side, it's also, in addition to those, it's in developing appropriate modeling methodologies, because it's not necessarily as clearly defined as calculating a value at risk, for example.
Of course, I mean, we've actually reached our time, but of course, another area where banks they're big users of big data as well, and of course, that's an area that the profession is expanding into. So, look, that just leaves me to thank Nancy and the support we've had in terms of putting this webinar on. I'd like to thank Claire, Nuis and Anthony for being great panelists, and thank you all for participating and dialing in today and sending through some really good questions. Thank you very much indeed. Bye-bye.
Cheers. Thank you.